Good evening, everyone. Welcome to the last and probably one of the most exciting topics, like highlighted before. It's how money is moving to next-gen wallet, how AI is redefining personal finance. Now, we all know in the time that in this world, everything is getting transformed digitally, every aspect of our life, right? It is not about what is getting transferred, it's about how far we have come along this way and how much more to go, right? And it goes without saying the way we manage, invest, and ultimately spend our money has been evolving exponentially at an unprecedented rate in the last few years. And digital wallets or AI-driven personal finance, this is next-gen tool have helped us change the way we think about or interact with our own personal finances, right? So to unpack all this and more, we have brought together an exciting panelist who will not only help us understand what innovation is happening in the personal finance market, also the challenges that comes along with it and how we can leverage this to innovate more, right? So first, let's have a brief introduction from each of the panelists to know them more from a day-to-day perspective how they relate to our current topic.
Hi, Kumar. This is Piruze. I'm a partner at SquarePeg. SquarePeg is a global venture capital firm that is covering Asia, started in Australia, and we are heavily investing in AI, SaaS, and FinTech, including WealthTech.
Hi, I'm Patrick from Robinhood Markets. Robinhood Markets is a mobile-first investment platform. We are headquartered in Menlo Park, California. We are listed on the NASDAQ. Currently, we have about almost 25 million customers spread across the US and Europe who have trusted us in their investment journey.
Hi, I'm Wells, CTO for FSI APAC at SoftServe, and we're a deep technology provider company focusing on AI and generative AI.
I'm Christine Yu. I'm the co-founder of Sophia, a B2B financial education platform focused on women and their money. We work with banks and corporates globally to deliver financial well-being solutions specifically designed for women at scale.
Hi, I'm Antonio Separovic, co-founder and CEO of Oradian. We provide a cloud-native core banking systems for financial institutions in emerging markets. We started off in Nigeria. Today we're in 12 different countries, Philippines being our biggest, and we're serving about 50 plus banks.
So here you go. We have got panelists from the world of fintech, digital banking, and personal finance to talk on this topic, and they're aptly placed to discuss this. So like I mentioned, technology has definitely changed our lives, right? So currently in the personal finance place, what do you think is one of the most transformative trends that has brought a kind of evolution in this in the personal finance market?
So we focus on financial decision making. I think with women especially, women are deeply underserved when it comes to financial services, yet women are 51% of the world's population. And if women invested at the same rates that men did, there would be an additional $3.22 trillion in personal AUM in the world. So for us, we're really looking at the opportunity space. It's a $700 billion opportunity. So when we look at financial decision making, I personally think that one of the most important trends right now is helping people make better financial decisions. And what does that entail? I think the first part is mindset, and the second component of that is, the models, right? The mechanisms of that. We have a lot of solutions in the world on the mechanisms, right? The tools, the apps, but we're really not focusing on how do we deliver that mindset piece in a technologically scalable way. So that's really where I think that's a really interesting place to be looking at in terms of future trends.
Yeah, I think we're seeing a lot of movement as we start to see these generative AI platforms and these kind of agent approaches moving into applications, creating a more seamless sort of experience about how do you get to products and how you engage with these platforms and actually buy leverage.
Got it.
So not related to my business, but I think I often see that one of the biggest key players here has been VCs, because they've been providing capital to lower the entry level or the barriers for new type of technologies and new type of financial institutions. So banks no longer have the monopoly on providing financial services. And I think that's what's really exciting. It comes with a lot of noise, but I think it's the fact that this is all happening by a number of different players who didn't come from the incumbents is really amazing.
I'll add in as well, like completely agreed. If I were to summarize what's going on, I think it is education. I think the barriers to entry for many people got lowered, so people are a little bit less afraid of investing. Whether it's a good thing or a bad thing is another conversation, but also access or democratization, like many folks say. In many emerging markets such as Indonesia, people did not have access to US stocks or more like longer term investing opportunities. And with the VC money coming in and great founders building these companies, I think more and more consumers are getting access to more like high quality investment products.
Patrick, you want to add how the technologies are filling the gap from a customer perspective?
Definitely. I think democratization of finance is just not about lowering the barriers of entry as to how much money you have. I think it's about financial knowledge as well. And I think there can be great use of technology in terms of how we can aggregate information, how we can curate information, and how it can be filtered so that everybody can be educated on financial matters.
Great insights. Good that you brought the investment perspective, because our next questions are for you. What kind of investment opportunities do you identify in a startup that is working in this place, the new players that are trying to address certain problems, right? And how are they filling the current gaps? And what kind of value addition they will bring on?
Sure. I think this is a place that we hear a lot about right now, but if you look at what the options were for consumers, they were very, very limited, right? There are private banks, and private banks are not equipped to handle or partner with people that have below a certain wealth. But actually, these people have a lot of money that they need to invest in. And as they got educated, they are seeking for alternatives. And they are seeking for alternatives that are more aligned with their interest. So we have seen many interesting companies that are like starting and making sure that as they grow, they are giving them they are giving the consumers the right advice and right products, and they can make money as their consumers make money.
And how do they differentiate themselves from these banks and incumbents, those who are not able to address this market?
I think the first one is like definitely right, the products, the access to high quality products. If you wanted to get access through your bank to certain high quality products, you would need to talk to a lot of people that would spend hours with you. But if you know what to get to, I think it would be very frustrating. The second thing is, if you're not above a certain wealth, you cannot talk to these people anyways. But there are so many products that are available in US, Europe right now, like that are coming to Asia, Singapore or Indonesia, that like as people get to know them, they tell their friends or they tell their colleagues, and they really increase their, I guess, AUM. The second piece is we see a lot of younger people that want to get access and have a view on what products to invest in. And before the Robinhoods or the Pluangs of the world, that wasn't possible. So like we see that second line of wealth management companies coming up.
Got it. So, understood. Now, from an experience perspective, how do you think technology has made these players address a lot of the issues? Like, let's say, is it AI, is it blockchain, is it, or it's simple adoption with financial literacy, right? So how do you differentiate that in terms of 3-4 parameters? Like one was definitely the market, the type of market that they were able to address, right? So in terms of technology, how do you differentiate from your experience and products?
I can kick off and maybe just, I think that there's still a long way to go before we start differentiating ourselves. I think right now there's a lot of plays that have to happen at the same time. So we talk about AI, but you need good data. So really what's more fundamental is we need good interoperability. We need the rails in place. So to get the best personalized, lowest cost of having personal finance tools, you need to make sure there's a lot of back-end stuff happening seamlessly. And so I think there's a couple of things that have to all come in play. So if I just touch on that question about investment, I think there is investment on the front side, the B2C side, and there's a massive opportunity to invest on the B2B so that all the stuff starts coming together, because the rails that I'm building impact you to reach more consumers, to get more intelligence, to get the better experience for the end of the user. So it's like, hey, I've got $5 spare change. Do I buy, I don't know, something, or do I invest? And that should happen through your voice, like speaking to Siri. But there's a lot of things that have to happen in the back. So.
Yeah, I just think having worked in banks, traditionally for most of the time, as fintechs have come along, it's pretty clear that banks really struggle with their data real estate, and to operationalize that, there's a lot of regulatory rigor. And I think through the fintech space, what we've seen is we can actually use generative AI to surface these new products and applications, make them really simple and accessible. And to your point is, I really believe that really getting your data foundations correct, and that's a lot of the problems we tend to solve for our customers, and making it a accessible and cost-effective tool to use, that really drives and accelerates that uptick, within the AI and ML and generative space.
Good, you brought AI. I wanted to elaborate a little more. How important is AI in this space? How far have we come along, and how far to go?
Yeah, I think AI is incredibly important. I use it day to day. It's I ask it questions. If I want to know something, I have a knowledge gap, I really lean into it. I use that to inform myself, and then I reach out and engage with RMs or other financial people, or my friends, and that informs my decision and how I go to market with, where I put my money, and how I invest. So I think it's just going to be part of life. Recently having a chat with somebody they've just done a greenfield bank build, and they're like, no, we should have just done it all with AI. Not sure whether that's really possible, but certainly it would be very cost effective and cheap to run if it was done right. Yeah.
Follow-up to that, how far are we from a truly personalized AI financial advisor in the current space? To everyone.
I think we've still got a long way to go. I think there's a lot of great work that's being done to get us there, but it's not a linear process. So we're going to be building on stuff. It's going to fail, or it's going to succeed. It's going to take us to a next level. But again, I see it from a macro perspective. It takes a lot of players to get to that seamless experience. Rubbish in, rubbish out. That's what AI is at the end of the day. So the data has to be fundamentally accurate, single source of truth, available to multiple sources. And it comes back to some things like open banking. Doesn't sound sexy, but the better that open banking functions, the better that regulators play together, the better you can have pan-geographical engagement of data. That creates the best personal experience that you're going to get. And AI will present it the best to the individual. But there's a lot of work to get there still.
I agree with it, but to be able to create a great experience at a lower cost, like AI can be used in every function, right? Like a lot of these platforms need to acquire their customers cheap, and they can use the right AI tools to make sure that they are marketing right, they have the right segmentation, they have the right content. To be able to keep those customers that they acquired, especially the young ones that want to try all the options and the cheapest options, they need to serve them well. And we have some portfolio companies that are using AI, like many other fintech, so that they can provide better customer support while reducing their customer support costs 30 to 50%. And if they can tie all of these things and tie to better fees and cheaper, like best experience, at the end, it is going to be a cycle. But I don't think it is going to be a particular like thing that only Robinhood can do, or X can do, or Y can do. I think it is becoming a table stake.
I mean, I want to say that there's actually also a different question that we need to be asking. We're talking about a financial advisor. That's actually at the end of the journey, right? Because there's actually a huge decision-making and tech opportunity before that point happens, right? Because again, to Piruze's point, it's, you know, how are you engaging? How are you even bringing underserved demographics to that point, right? The reality is the financial services industry, the technology has not been made for underserved demographics. And so how are we thinking about even including those people in that customer journey? So I think there are, you know, for example, we launched our Women in Financial Education survey actually just this week. And although, you know, having a financial advisor is the number one thing that supercharges women's journey in, you know, kickstarting their financial life, actually 47% of our respondents felt they needed accountability and support along that journey. So there are so many opportunities to leverage AI in that journey, whether it's, you know, getting on top of your budget, you know, visualization tools. How do you make better financial decision-making tools along that journey? And then maybe you'll be ready for that financial advisor. Now, whether it's a human financial advisor or a human-enabled AI financial advisor, I think it's a preference, right? But I think there's a huge opportunity even before we get to that point.
I see, if I may, I see the topic of inclusion is quite wide. We're talking about a large percentage of the global population. And I think there's a lot of it happening already. So, for example, one of our customers in the Philippines, in Nigeria, they are 99% women, and they hold about 700,000 clients. So, and I think it's about participation first. But when you start merging this data and having it into you can have metadata. So, I don't know, you walk into a store, its geolocation recognizes where you are. You can start getting advice and saying, you more than likely walked in a store, you can afford something up to X, don't spend more. Or you've purchased something online, do you want to round up and put that into a saving kitty? So there's many different ways you can do. But again, maybe I'm over pushing my point here, but it's about the data, because once the data's there, then you can put a nice application layer that says, okay, let's analyze this data and what are the outcomes that you can do.
I absolutely agree with you. Just to follow up, I think getting the data in place is fantastic, and you're right. I think from a financial inclusion perspective, that budgeting, saving journey, I think that women are actually fantastic at that, right? 80% of women in many studies are fantastic at leading, short-term financial planning for their families. But where it's tough is actually getting them to invest. So that's where I'm quite focused on, is making those financial decision makings that get you to actually creating wealth through investing. So I think that's where there are a lot of opportunities, and where we can kind of leverage AI to really financially include us in creating wealth.
Understood. But just to highlight what he said, data has to be there. Data has to be the founding pillar for us to reach at a desired place in this space, right? Good that we brought from a customer perspective, and you have answered half of my next question. But what are the features, or let's say strategic direction, that this financial tool needs to have in place for financial literacy, to enhance financial literacy, or adoption of such tools? Because like she mentioned, adoption is also one more thing that needs to be addressed. It is one of the cog that needs to fit for the will to spend, right? So what, as per you, are the features or the strategies that will help us attain that?
So I think the number one thing that women in our survey that have reported is paramount in terms of where they learn about money and investing is impartiality. So the challenge is, for example, many financial services institutions have fantastic content on, financial literacy. So there is a lot of content out there. I think the challenge is actually that women especially value that impartiality. So they don't like learning about money from someone that is selling them a financial product or service. So building that trust is paramount, and that's actually why we saw a need to work as a conflict-free education provider, right? Working with banks directly on how do we engage with their underserved, either their underserved existing women customers or engaging new women customers, in the market. So I think trust is a key feature. So what does that mean? It's, women don't like a hard sell, right? There can't be, whenever you are, perusing financial content, a call to action of now buy this product or call us to buy this product, right? I think because again, it's about building that trust, building that foundation of, here's the information, you can do what you need with it. And that's why banks, we work with banks, HSBC Premier, JP Morgan, Commonwealth Bank of Australia in Australia also. And so we work with banks precisely to help do this, right? We launch these big financial education campaigns targeted at women. So the trust is a key feature, and really just understanding that financial decision-making journey, right? That most women actually struggle with investing, to get started with investing. There are many macro, issues that cause that, the gender investing gap. But it's actually just understanding the process, right? Sometimes it's as basic as, well, how do I actually, open up a brokerage account, making it very simple, jargon-free, easy. So I think there are many ways that technology can help, and I think, obviously this 24/7, applicability of apps, I think that's great for women who are juggling a million things in their lives, but really it's also the product and service design where you're really understanding those very unique pain points.
I just like to comment on that. So, I just think working in the banking environment, you come across these products, but even from my perspective, they can be quite problematic to really get a grip on and then feel comfortable investing in. And I think what you were saying earlier was pretty good, which is when I use AI and try and figure out what a product's doing and try and get that advisory advice, I want an independent and partial, and almost like a tested, informed opinion that doesn't really originate from the institution I'm banking with, because I believe there's always a vested, a vested interest there. And I think more broadly, it kind of speaks to that not allergic, but maybe a bit of an allergic reaction people have to actually putting their money in and thinking, okay, this is actually a sound piece of advice that I'm comfortable accepting and executing on. I think an AI can definitely bring that, and it's about getting the rigor around it being, I guess, I forgot the word, but basically, verified, and executable.
Understood. Again, my second follow-up question to that will be, what are the risks that a customer, since these are technologies that are being developed, trusted, right? These are not age-old technologies, right? So what are the challenges a customer should be aware when he's coming on these financial tools, when he's starting using this tools that are out in the market, be it a digital wallet or primary, much less developed financial advisor tools, right? So what certain challenges he needs to be aware of, or are we as a offerers, we need to make them aware before using this technology?
Yeah, I think so. Sorry, would you like to?
No, please.
Okay. So I think we're touching on verify, authentic, making sure that the information that's being provided is accurate, and that itself is a problem. Excuse me. I think that's quite a big problem. And currently, AI and ML can actually surface a lot of that information and get you to that level. I think as we move on and start to build in these high-fidelity frameworks that are doing introspection into the responses coming out of them, we will be able to execute on that with a lot more confidence. I think, but until then, it should always be, you really need to probably validate this or follow up with an actual RM or an advisor.
I think the biggest issue with the democratization is there is a line between the behavior that is, I just want to play or gamble whatever money I have, versus I'm here to invest and invest my money for long term. And I think that line is not very clear. And if you think of some of the companies that we are investing as well, or the Robinhoods, and one needs to be very careful. How will these brokerage companies make money, right? The more you trade, the better it is for the company. And how do you draw the line and say, hey, you know what, customer, this is your line. Like we don't want you to invest more than X, more than Y, or at least give the right guidance. It's very tricky because at the end you need to trust your customer and you need to trust that they know what is best. But at the same time, it is very clear what behavior is happening, especially with crypto and NFTs in the last like 4 or 5 years. That I think like the number one thing that we need to be careful about is that, because if the line gets really blurry, unfortunately what happens is instead of the companies, then the governments start taking action, and that's really what we don't want and what the fintechs don't want.
Yeah, and I think that's a great point, right? So I think like with the advent of like crypto, that sort of thing, it's definitely more towards like the gamification of finance, and that can be a problem for people. So I think really understanding that and ensuring that, I call them knowledge walls, which I love. You go in and you start to execute, start to buy something, and it's like, well, do you know what you're buying? Do you know what you're putting at risk? Is this really what you want? And then you kind of got like a few questions you got to go through. And it'll be like, okay, you understand, but this risk is yours, right? And I think that's quite an interesting space. And I think the main point I really actually want to make there is if you don't actually control that, how the customer actually interacts and buys, and informing them of that, then the governments do step in. Then it becomes highly regulated, and that actually then restricts access. So you don't actually get the business volume. So it is in their best interest to get it right.
You want to add something to that?
Yeah, so for Robinhood, 50% of our customers are actually first-time investors. So to all of the panelists' points, I think financial education is obviously of utmost importance. So right from when we launch, we have all of these educational modules, whether it's beginner modules, intermediate, advanced. We have self-assessments for these customers, so they really understand, or they can really test their own knowledge to know what they're getting into. And I think what we don't do enough is really have the customers think in form of the risks that they're going through when they invest in financial instruments. So there's a lot of misinformation in this market. For example, some people will always say leverage is bad, but they don't look at what is the underlying, right? So I think once again, having all of these financial educational tools within our app, within our website, that really helps to mitigate a lot of the risks that we see of investors speculating without education. Yeah.
If I may, we're talking about quite a broad spectrum, and I feel like we've kind of gone into personal investing through a wallet. But I think there's a lot, if I go back to the question, tech, refining personal finance, I think we need to segment things. So if we're talking about the base of the pyramid, inclusion and so forth, there's the basic essence of savings, how to save. Okay. Once you've achieved something, well, what can you do now that I have saved? And in terms of, again, I think this is where AI can really play a big part. Is a simple question: is this your primary account where you have most of your income? Yes. And if you're spending beyond a certain point, it can give you feedback and say you can't actually be spending so much, or you can afford to spend or bet in investing versus saving. And so this is where AI can become very powerful at the point of a transaction, and then can start guiding you down a line. And that starts funneling into whether is this a saver? So should a bank be collecting this and not recommending investment? Or actually this is a high income earner, they can actually gamble, so to speak, so they can take a higher risk. And one of the, I reflect with my daughter. So I'm going through this financial education with her, and she gets pocket money. She gets enough to buy one item a week of what she wants, but not two. And what I've noticed on the side is this tool that she's using, this bank account, she's been saving for a helmet. So there's a gamification is helping her to save. And that's her first step in education, in financial education. Now, she's still a minor, so they can't invest. But when she builds this up, she's not going to have to make a choice. Do I buy what I was saving for, or do I buy something else? And I think it's the point in time education, by knowing some of the metadata and some of the opportunity, and then rationalizing where this individual is, being conservative, these are the building blocks to actually start building this out. And we do have safeguardings that if we can be conservative. So you don't, as a business, it's not about maximizing the revenue straight away from an individual, but maximizing their education so they can actually be able to play and take bigger bets, which then the companies that are building these apps or whatever can actually get a return on an investment. But you're doing it at such a scale, and you can automate this with AI.
Noted. I love the fact that we have gone off script. If you see, my script is all on the table. So we have a lot to talk, but before touching to the last round, let's have the Q&As. I see that few Q&As that come our way. So the first one is, can a wallet really replace a bank account for customers and business?
No.
I think we agree on this.
Yes.
You want to add anything to that?
No, I agree.
I think the thing is, what is a bank? So, as a consumer, we see a lot of wallets and like, oh, you know, they're going to like take over the banks. Banking, what's it, Brett King? Banking is dead. But banking provides a lot of services. You're not going to take a mortgage on a house through your wallet. You know, so I think it's a case of what are we talking about. So, what I think is, wallets are accelerating the breakdown of the monopoly that banks had of banking. That's what it's about.
Like new world ecosystem. Yep. So health benefits, insurance perks, shopping, those kind of things where you go and spend that money and you kind of collect these credits and gamify.
It's actually unfair. It's an instrument against an institution, right? So I think it's not there's no way of answering this because there are two different answers and two different discussion points, right? The next one is, how would regulators embrace and regulate wallet and use of AI in the new era?
AI is too big of a complex question. No.
But let's stick to what we discuss. Innovation in each field has hurdles, let's say regulatory, security, privacy, or even adoption, right? So what is the biggest challenge in this space for anyone to innovate? Be it a bank, be it a player, next-gen player, be it a established player. What is the biggest challenge in this space?
So, if I may, so I think regulators have a really simple job, and that's to protect the population. So if companies are proactive and being conservative how they are making money and not being rushing to get there quickly, regulators will give them sandboxes and environments to play with and learn so that the regulator themselves can learn. So I think it's about where does one put the ROI? Is the greedy or the let's learn together and collaborate kind of like measure? And that's going to be able to like keep the regulators at bay. I think that's a proactive thing that we can achieve.
No, also think it comes down to high fidelity on the data and data platforms, security, anonymization, you know, and how that's actually implemented and leveraged and governed.
You want to add?
Yeah, sure. I mean, I think I am not as familiar with the AI regulations in fintech, but if we take a step back and think of regulations and AI, like there are a lot of questions around how the companies are getting data. How are they using? Are they biased and not biased then using that data? And how is it unlocking or locking people out of future potential products? And immediately the thing that comes to mind is, of course, insurance. And I can totally see certain insights and data to be used, but maybe used too much on the interest of insurance companies and commercials, but not in the interest of the population. So it's so nuanced, and it differs from case to case that I'm sure like there will be certain regulations on use of AI and use of data in that insurance space. But I'll let the others talk about it. I think there's so much to talk about.
Well, it's AI. I feel it will be for all the technologies that is happening, right? So, understood. I think that pretty much answered. The last one is, before we dive into the last section of our conversation, do you see technology breaking down TradeFi products to be more accessible for all?
It's already doing it.
Yeah.
Yes. Yeah.
Yes.
Again, agreed there. Do you want to highlight one example before we move?
You can sign up for a bank account using a phone number. It's accessible, and it's tiered KYC, so you're limited in what you can do, but anyone can get access today who has a mobile phone. The cost of mobile phones dramatically coming down, pay as you go. So everything is becoming more and more accessible to the limit of what the infrastructure is. If there's no mobile signal and there's no bank there and no civilization, yeah, you can't access it in those remote areas. But it's getting better and better, and there's new barriers being broken every day. So I think we're doing a great job collectively on that subject.
Correct. So I think we'll wrap the session up. So clearly we are far away, the personal finance space is far away from an optimus moment like we saw from Tesla. But looking forward, let's say in the next 4 or 5 years, where do you see the space to be? How far would Haben be if all the fundamental pillars that we discuss are in place? What is your outlook, or how is this space going to look like for someone in personal finance? I would like every one of you to answer this. This is the last one, so that we can have some debate on this.
I think in financial services and technology, the barrier is not the technology. The barrier is the regulations and, right? Like, how can we make sure that consumers and businesses have access to the best products and cheapest products, and I can go from country to country and explain why it is not happening. I think that is number one. And I think now number two is there are certain business model fundamentals that might not be working for startups. And I think that's when some of the financial services infrastructure technology players come in, hopefully, and help some of those traditional companies innovate and really deliver the products and experience that consumers or businesses deserve.
I think that you need to be looking at how are we. It's not a tech problem actually. It's really more how are you making sure that your product and service design is really including kind of everyone in the ecosystem, right? And I think, to give you kind of a stat, in an Ernst & Young kind of wealth report for women, even ultra high net worth women in Hong Kong and Singapore complain that 80% and above of these women were not being listened to by their relationship managers, right? And that's a basic fundamental, service and offering design. So I don't think it's a tech issue. It's actually how do we create a product and service offering that is designed to really deliver the best and most perfect personalization, for your financial needs.
It's more like a journey, how everything needs to come together like a puzzle, right? Please go ahead.
I just think, from my perspective, it's more about the risk aspect, quantifying the business risk around putting these things out there and how you actually monetize them, and understanding that both at a monetary and technology value, and the ethical aspect of that and the impact on the people that are using it.
Yeah, so in terms of personal finance, I do see AI being a very large part of it. A lot of the information that is accessible to institutional clients. I think with the help of AI, what I spoke about just now, aggregating the information, filtering it, and curating that and making that available to the man on the street, allowing them to make more informed decisions. I think all of this will be possible in the next 4 to 5 years with AI. My other thing is about investment co-piloting. To Christine's point about relationship managers and all that, my thing is that the AI will never complain. Right? If you ask the AI to update you every single day and basically to give you investment ideas, they can do it at your command, right? So I think investment, this co-pilot, that's what we call it, that will be a huge thing in the next 4 to 5 years as well.
Finally, we got Patrick all excited about AI.
I am very excited.
You have been holding back, I could see that.
I'm just not the subject expert.
I think it's really exciting what we're about to go through. It feels like we've just had a bit of a fintech winter. So spring's in the air, as money's going to be coming in, new businesses. There's a lot more discussion on the problems, so it gives great opportunity for new fixing. So I think the next 4 to 5 years is going to be massive. It's going to be very transformative. We're going to have super personalized solutions coming out because we're going to have more and more data available, centralized around us, and there's just going to be more and more openness. So I think it's really exciting. What does it look like is difficult to say. Like was discussed in the previous panel, I think there's going to be a lot more voice engagement and personalization around what I am as I do this convergence of data around my personal ecosystem. And all of that is going to have much more inclusion and participation for capital markets to actually have more capital to do new things and exciting things with. So I think we're at a very, very interesting junction.
Put it in simpler terms, responsible adoption along with balanced nudges powered by technology at the back end is something we need to go at, right? So I think we have covered a lot of stuff. Thank you, panelists. Thank you, audience, being part of the journey. And it is really exciting to be following the personal finance space as of now. Thank you so much. Have a great day.
Thank you.
Thank you.
Thank you.